Ladies and gentlemen, good day and welcome to Sky Gold Limited Q3 FY23 earnings conference call hosted by Kiran Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Umesh Mundekar from Kiran Advisors. Thank you, and over to you, sir.
Thank you. Good evening, everyone. I would like to welcome Mr. Mangesh Chauhan, Managing Director and Chief Financial Officer of Sky Gold Limited, Mr. Darshan Chauhan, Whole-Time Director, Mr. Mahendra Chauhan, Whole-Time Director, Mr. Shivam Goyal, Secretarial Advisor, and Mr. Chintan Shah, Chartered Accountant. As this is the first call from the company, we will have a brief introduction about the business model of the company, then Q3 result highlights, and followed by Q&A. Now, I hand over to call to Mr. Darshan for a brief introduction about the company. Mr. Darshan, over to you, sir.
Mute बन गया दर्शन.
Mr. Darshan Chauhan, could you please unmute your phone?
Good evening, everyone. Hello.
Yeah, we can hear you.
Hello.
Yeah.
Hello.
We can hear you, sir. Please go ahead.
We can hear you, Darshan.
Okay. Good evening, everyone. I extend my warm welcome to the first conference call of the company for discussing Q3 FY23 and 9-month FY23 financial performance. As this is the first conference call for communicating with you all, I will first give you a brief introduction about Sky Gold Limited. Our company was established in 2008 and today it is one of the leading jewellery companies based in Mumbai. The company has been engaged in the business of designing, manufacturing and marketing of gold jewellery. The company is specialized in lightweight jewellery of 22 karat gold. The company manufactures jewellery through casting process. Our product portfolio is made up of plain gold jewellery, CZ studded gold jewellery and Turkish jewellery. Sky Gold manufactures its jewellery in its 18,000 square feet manufacturing facility in Mumbai, India with the help of German equipment. One of the only manufacturers to use state-of-art equipment from Turkey, Germany and Italy. The company has a capacity of processing 300 kg gold per month. The company has a design library of more than 9 lakh designs of rings, bracelets, bangles, fancy pendants, earrings, etc. The daily output is 3,000 pieces. The company works on B2B model with leading jewellery retailers like Malabar Gold and Diamonds, Joy Alucas, Kalyan Jewellers, GRT Jewellers, Senco Gold and Diamonds, Kimji. The company also works with large wholesalers. With this, Sky Gold products are available at more than 2,000 showrooms across India. Out of top 5 customers contribute 70% of the revenues. For FY22, the company has reported total revenues of 796.26 crore and net profit of rupees 16.92 crore. Recently, the company has entered the D2C market in USA to expand its business. The company has a tie-up with Varanium Inc. USA and will introduce its gold jewellery product, launching its own brand in the US retail market. Sky Gold announced a new gold jewellery brand, Vesteria, in collaboration with Varanium Inc. Vesteria will launch its first collection of rooted modernism, a mix of earrings, neck pieces, rings and bracelets in a range of 18 karat as well as 22 karat jewellery pieces, targeting the young woman category especially. Now let me give you all the industry update. The Indian gems and jewellery market consists of gold, silver and diamond jewellery along with other precious gems and pearls. India is the second largest consumer of gold with 70% of consumption being in the form of gold jewellery. The market can further be divided as fine jewellery and costume jewellery with 95% of the market comprising fine jewellery. The Indian jewellery sector is 85% of Indian jewellery market and is estimated to be worth 57 billion in FY22 and is projected to grow to $91 billion by FY25. The segment is seeing major participation of studded jewellery. The organized retail share is 40% consisting of national and regional players, while 60% is form of the unorganized segment consisting of 5 lakh plus local goldsmiths and jewelers. The government of India has declared the gems and jewellery sector as focus for export promotion It is continuously promoting brand India in the international market. It has taken various measures to promote investment and to upgrade technology and skills. The gold jewelry demand in India is expected to grow at a steady rate of 11% during FY23. The organized retailers are projected to grow at a faster rate of 14% with the strategic store expansion and increasing consumer preference for organized players. The growth is likely to be accompanied by higher operating margins supported by growing share of studded jewelry and better operating leverage. Growing preference for online platform, rural development, customers' preference in choosing hallmark products over product made by unorganized manufacturers, increasing disposable income and growing consciousness of branded jewelry. With our strategies and diversified product portfolio, we have well positioned ourselves to leverage the growth opportunity in India as well as the international market. Your company entered equity markets by SME IPO on BSE SME in October 2018, raising rupees 25.56 crore at issue price of rupees 180. The company moved to the main board of BSE and NSE, that is on January 6, 2023. This is a big milestone for us. The migration will provide a boost to the growth of the company. Migration will help our company to attract more investors and provide the further growth capital to help the company for future business growth. Now let me take you through to the financial performance of the company. Q3 FY23, revenues at 267.57 crore, EBITDA at 12.28 crore, up by 73.45%, EBITDA margin at 4.59%, net profit at 11.67 crore, and EPS at 5.91 rupees 5.91. So 9-month FY23 are revenues at 884.62 crore, up by 52%, EBITDA at 25.37 crore, net profit at 16.19 crore, and EPS at rupees 11.66. So this is the performance for the Q3 performance for the company. So you all can go ahead with the questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Any participant who wishes to ask a question may enter star and 1. The first question is from the line of Himanshu Oban from Suraj Research. Please go ahead. Himani, your line is unmuted. Could you please go ahead with your question?
Yeah. Hello. Yeah, can you hear me?
Yeah, we can hear you. Tell me, ma'am.
Yeah. Your EBITDA margin is sub 5%. Can you please explain?
Himani, sorry to interrupt. You might have to repeat your question. If you're on a speaker mode or something, switch to handset and talk. We can't hear you that clearly. Your audio is a bit muffled.
Hello. Am I audible now?
Yes, please repeat your question.
Yeah. Your EBITDA margin is sub 5%. Can you please explain what is a headwind for that? What is industry margin?
Yeah, you want to know about the increase in EBITDA?
Yeah.
Okay. We have launched in this in last quarter. We have launched many fancy products, which in this monopoly products, which market is not available that product. So we have increased our margin in that product. In the same corporate parties, Manwal Gold, Joy Lucas, and we made a special product for them, and in that our margin has increased here.
Okay. Your business is mainly in B2B.
Yeah,
Would
B2B.
the same to continue or to change model to B2C?
Right now we have not planned for anything B2C. Now right now we are into B2B only. Here.
Okay. Please explain your D2C tie-up with Varanium.
Varanium Cloud, we have tied up with him for the US. We have launched many 18 karat yellow gold, rose gold, and white gold products for mainly US women, fancy products, and we are launched the online on our website Vestria. So we are expecting good response from that. We have right now we have launched our website. So in next April, May, June, you can see the results. And in that, profit margins are very good in the US markets. So we are expecting to grow our PAT in next quarter, in April, May, June, yeah, for that.
Okay. Okay. Can you throw some light on making charges growth and outlook?
We are in basic products. The making charges are very stagnant, but in the fancy products or monopoly products you can make. So we are trying to make every day the monopoly products and fancy products which are not available in the market with every manufacturer. So in that our making charges will grow from 300 rupees grams to 500 rupees per gram, 600 rupees per gram for Indian products. Yeah, in Australia, in the US, we have already made some special products, and we are expecting the sales in next quarter, and we'll see the results in next quarter for that.
Okay.
Yeah.
Okay. And my last question is, how's the jewelry demand post-Shadi season?
It is very good. You can see the quarter revenue also, and in this quarter also it is very superb growth because many COVID marriages were postponed and they are scheduled in this year only. So I think it is triple the marriage number of marriage in this year in the difference of every year. So it is very boost the demands in this quarter. January, February, March also demand is very boosted up.
Okay.
Yeah.
Okay. Thank you, sir.
Thank you.
All the very best.
Thank you. We take our next question from the line of Harsh Shah from Dimensional Securities. Please go ahead.
Hi. Good evening, sir. I have a few questions. Since you mentioned that we are in B2B business model, so when we refer to some of the big retailers in the industry, say someone like Titan, Kalyan Jewellers, Jewel, etc., how much of their jewelry is sourced by them from wholesalers like you, and how much is made by them in-house? So just wanted to understand the size of the market.
Yeah, 90% they are sourcing from outside. 10% only they make inside because they are basically retailers and they are focusing on the sales and retail store, and they don't want to manufacture same products in their factory and display in the counter. They want different manufacturers here who have developed their special design from Kolkata designers and all, and from worldwide they have taken the concept and they want different manufacturers. Whoever is developing good design in good inventory range, good pricing range, so they do tie up with them for yearly this much kgs, and they give good response because if they take from many manufacturers, their retail sales is boosting up. So they are not interested to go into manufacturing, basically.
Okay. Okay.
Yeah.
And could you name few of your clients with whom you work?
We work with Malabar Gold and Diamonds, who were before 6 months he was on the 4th number of world top 10 jewelers revenue wise list was given. So he was on 4th number. Tanish was on 7th number. So we work with Malabar Gold and Diamonds. He is a major client of us. Joy Alucas India Limited, Senco Gold from East. He has 200 showrooms. GRT Jewelers, he has 40 showrooms. Khazana Jewelry, he has 60 showrooms. Lalita Jewelry, Kalyan Jewelers, Bhima Jewelry, etc. All corporates we do. Tanish is not on our board. Yeah.
So are you looking to pursue business from Tanishq?
Yeah, we are in the talks with Tanish.
Okay. Okay. And so you've also set up overseas subsidiaries. So just wanted to understand what is the size of opportunity there and what is the strategy in the overseas market.
We have already made our strategy. The products we were in the R&D for last 1 year. What the product should be made for US, which will hit in the US market for the US women. So already we have last 1 year we were designing and we have developed the products, and already we have launched our website also. So now before 10 days only we have launched. So profit wise there is very potential in the US market. Margins are very high in the US. If your product is powerful and product if they are lacking very much, they will put any money in that product you know about the US market. If your product is very powerful and monopolistic and very attractive, you can earn as much as you can. But volume-wise, it will go slowly. But margins will be very high. Instead of India, US margins are very high. So we have made very exclusive and monopoly products, limited products that we can raise our margins. So let's hope for the best. We have already launched our website. We are expecting good sales and good margins from that.
So if I look at current quarter, we did sales of around 270 crore. How much would be from overseas market in this?
We don't have the figures right now because we have just launched the website. Right now there is no right now there is in this quarter there is no search from here. We have launched in this quarter only. So revenue will start maybe in March or April. So we are just waiting. We are doing the marketing for the website right now.
Okay. And in terms of margins, so this quarter we saw a very sharp jump. We used to do around 2.5%, and suddenly we are at 4.5%.
Yeah.
So is this sustainable going ahead? Will we keep on doing this kind of margin?
Because we were making from last 6 months exclusive product, monopoly product. We have launched in this quarter only, December quarter, that products with good margins, and corporates have accepted that pricing rate because they know that these products are only with Sky Gold. Not with others. So they are also making money from that, and we are also making. So we are 100% we will go, more margins will be created in the next quarter.
So when you refer to these monopoly products, are these studded products or are these in gold jewelry or
gold jewelry only.
What are these?
Only gold jewelry only. Gold jewelry with plain and studded with American diamonds. We don't deal in clear diamonds.
Okay.
So they are only in gold jewelry only. Yeah.
Okay. And in terms of inventory risk, how much of gold do we import from the inventory which we have on our balance sheet, and how do you manage your inventory? How do you hedge your inventory risk?
We don't import directly because many importers are there in India. They have tie-up with banks, huge tie-ups. So we can take how much to daily we want inventory from that importers. So daily inventories are purchased from the importers, bullion bars, and converted into jewelry. The rest part of you were asking about the hedging. So we have the hedging team. Each and every sale and purchase is hedged by our team with 30 seconds times of our transaction in the MCX multi-commodity exchange by our hedging teams.
Okay, so you don't take any unhedged exposure?
No, we don't take any single gram also. There is no exposure for without hedging. Every sale should be hedged or purchase should be hedged within 30 seconds time. We have given to hedging team and they are doing it properly. Yeah.
Understood. Thank you so much for answering my questions and wishing you all the best. Looking forward for more communication.
Thank you, sir.
Thank you. Our next question is from the line of Vaibhav Shah from Cogent Research. Please go ahead.
Thank you. Congratulations on good set of numbers. So I have a few questions regarding the business model of the company. Yes. So we are in B2B business. So in what segment exactly we are catering? It's high-end jewelries or like 1 gram gold jewelry? Exactly in which segment we are catering? And what is our average ticket size for the single product, average ticket size?
Okay. We are basically not in 1 gram gold or something. We are properly in a 22 karat gold jewelry, and our products are majorly for medium class range. It is also for lower class range. The corporates, they cater for middle class range only. And our ticket size, our product is all of over 15,000, 20,000, 25,000 inventory. 70% of our inventories are 15,000, 20,000, 25,000, 30,000. This price. 30,000 of this inventory is our 30,000 to 1 lakh, 1.5 lakhs. Maximum we keep 1.5 lakhs inventory because these inventories are very day-to-day running and better of every corporate. So basically, designs are very exclusive, but it is not very higher end customer for higher end customer.
Okay. So average 3 to 4 grams say, I think 15, 20 grams is max.
Yeah. 20 grams is max. Majorly it is from 3 to 4 grams to 10 grams. Yeah.
Okay. So in terms of capacity, how much capacity we have for processing?
300 kgs capacity we have.
300 kgs
per month. Yeah.
300 kgs per month. Matlab, around 3600 kg.
Yeah, it is 3.6 ton we can make. Yeah.
Yeah. So how much we have utilized in this during this quarter and first 9 months?
Already we are using 200 kg per month. Yeah, we are using.
Okay. And in terms of our footprints, our products are mainly available at this leading retailers you have mentioned. So they are available at their almost all branches, or it will be state specific or region specific, like North India, South India.
We are making a specific product for North also, South India also, proper Maharashtra also. So almost 90% showroom they are available. Some of the 10% showroom they will be keeping because of the taste and region, but 90% store our products are available.
Okay. So so in terms of footprint, if I'm assuming, so in how many store approximately your products will be available in pan India basis?
2,000 to 3,000 stores they must be available in all corporate mix of all corporate Malabar, Gojo, Alukas, Kalyan, each and every corporate. 2,000 to 3,000 stores. Yeah.
Okay. So now a few questions on related to the ordering process and all.
Yeah.
So how is ordering is done? Like they place in the beginning of every month, or they provide order for, let's say, 4 to 5 months for the particular product. How it is work?
Basically, some of the corporates buy right now from the inventory which are keeping. Which we keep daily making our new products. So they select from the our inventory only. Online selection also done. They come to our factories and do the selection. And half of them are giving order and giving the time for 15 days. Some give for 20 days. Not 4-5 months. Not needed in cool weather because season changes in 1 or 2 months. And so it goes for 7 days, 15 days, 20 days. They are giving the time, but we also have sufficient time. So we make the product in 7 days and deliver them. Some of them are difficult products, so we make in 15 days and deliver them. So 7 to 20 days times they give, and we are taking. So half the production is on order base, half of them are on direct purchase from the inventory. So we keep making new products in the inventory and stock, and they reach us by we come to our factory or do online selection, and we deliver the goods.
Okay, so online selection. So is it through your website or the
website also? They are doing selection from our app, and from WhatsApp calling also they do the selection. Yeah.
Okay. So you have in-house app.
Yeah, in-house app also we have, and from
so
our app.
It's for B2B, correct?
Yeah, B2B, only B2B. Yeah.
Oh, okay. So in terms of a client, who will be your largest client?
Malabar Gold is our largest client. Yeah.
Malabar will be the largest.
Yeah.
Okay. And last few questions. In terms of your gold, you are into gold making. So losses is while making is minimum. It's where you can maximum squeeze out the margin. So what kind of precautions or you take during the production process or while making it, so to reduce down on this losses? And where is your factory situated? Totally, how many workers or artists work in your in your factories?
We are situated in Mulund West, suburb of Bombay. So we have 18 to 20,000 square feet area. We have 300 workers on board. 150 to maybe 180 on salary, other are on contracts. So we take measures. We have security system all over the factory. They have checking instruments for the karigars. They work. They come in and come out with the full body screening. We have Italian German machine which work for polishing and grinding and filing. So they have good recovery, good suction power to suck the gold loss, to minimize the gold losses. So international imported machines support us to minimize the loss. Other than we have security systems, cameras and all, and full body squeaking for the karigar each and every day in, day out. They go to washroom and everything. So we are taking all these measures, and main part is imported machine that help us to minimize our loss here.
Okay. So every loss you can get while processing, let's say, if you are processing 10 grams, so what will be the maximum loss will be there?
If you are processing 100 gram, losses, initial losses are 5 to 6% or something. After recovery, it is 2 to 2.5%. Yeah.
Okay, that is good. And just last one question.
Yeah.
From the current capacity, how much revenue we can generate, and what are the further plan for the expansion or increase in capacity?
Yeah, we in this capacity we can go to 1800 crore. Already we have plans to move to Turbe, MIDC. This is the basically manufacturing hub for big industries. So we have the plans to move, shift there. We are seeing the factory, bigger factory, which have the capacity to go to 3,000 crore, 4,000 crore. So already we are in the talks, and maybe in 1 or 2 months we will crack the deal and go to the new factory, which have the capacity of 3,000, 4,000 crore and to acquire 800, 900 crore karigar.
Okay. So you are saying from current around 300, you will be around 800, 900. That is almost 3 times of your current capacity.
Yeah.
So what will be the approximate capex?
Means
how much will be the cost for this new factory?
This will cost 20 to 30 crore pricing of the factory. So we have just in the initial plan, as soon as we move ahead, we'll keep intimating for that. Yeah.
Okay. Thank you, and all the best.
Yeah, thank you, sir.
Thank you. Our next question is from the line of Mohit Mehra from Guardian Capital. Please go ahead.
Good evening. Thank you for this opportunity. So I wanted to ask about the inventory. So let's say, for example, we sell it to Malabar and then that remains unsold. So what?
Mohit, you're not clearly audible. The audio is a bit muffled.
Yeah.
Cool.
Can you please switch to handset mode and talk, please? We can't hear you
Is
clearly.
it better now?
Yes, and please repeat your question if you have spoken.
So what about inventory? So for example, let's say you sell something to Malabar and that remains unsold. So do they have an option of returning to you? How exactly does it work?
Corporates don't return us the goods. They don't have the policy to return any goods. If there is in the yearly, if 1 or 2% any damage or any, they do all the QC before taking the final products. All the QC teams are there. So each and everybody is QC done by their team, hallmark done by their team. After that, only final bill is raised. After that, only if 1 or 2% any damaged product is there, then only they give us return back. Otherwise, they don't give any return. There is no return policy from corporates here.
Got it.
आपण ज्या व्यक्तीशी बोलत.
Yeah, tell me, sir.
And how are the margins decided? So is it like a percentage of sales, for example, say 2%, 3%, whatever, or is it like 300, 500 rupees per gram? How are they decided?
Yeah, we are on the 300 in the rupees only, 300 rupees per gram, 400.
So it's a fixed 300. So for example, if the gold price were to decline in percentage terms, the margin will go up. Is that right?
Margins?
So let's say if the gold price were to drop substantially, then the EBITDA margin or gross margin, whatever, that would shoot up, right?
No. It is fixed in percentage only, but 5% fixed also. It comes to 300 gram, 400 gram, 350 rupees gram. It is fixed in 5%. We take from 5%, 6%, 7% from the customers. So it is converted into rupees. whatever the rate that is. So if the gold price goes down or up, that's make no difference.
Okay. Got it. Got it. And like, how frequently are these negotiated?
In 2-3 years, not frequently, they negotiate the price, because once the agreement is made, pricing are done. After 2-3 years, they revise the price or come to us for any many many products. They bargain for some to keep the rates reasonable. So then we launch new products. Then we can create more margins from that. So in 2-3 years, they are reversing the price.
Got it. And this facility that you said, so at the current Mulund location, you can produce 300 kg per month.
Yeah.
You're currently at 200, right?
Yeah.
So this 200 is the optimum utilization, or can it go up to, so like, is it possible to operate at 100% utilization at 300 kg per month? Hello.
Ladies and gentlemen, it looks like the line for Mr. Mangesh Chauhan has also dropped. We request you to please remain connected while we join them back. Please do not disconnect.
Yeah.
Yeah, Mr. Chauhan is back. Yeah, you
Tell
may
me.
go ahead, Mohit.
So is it possible to use the existing capacity at 100% utilization? Because even if the production were to increase by 50%, we still have enough capacity, and you're talking about tripling the capacity. I just didn't understand
because
that.
already we have the plans to grow in next year, and corporates are already increasing this. So Marwa Gold is opening 4 stores every month. Joy Lucas is opening 5 stores every month. So they are giving us feedback that we are increasing our store. You should increase your production capacity. We'll be giving this much order next year. We are expecting to give you and this model. So we have the capacity for 18 to 100 crore. We are targeting 3,000, 4,000 crore in 2 years, next 2 financial years. So we have to prepare for the next year. Next year.
Okay. How much time would it take for the new facility to be set up?
It will take 6 to 9 months because we do the paperwork. Interiors are to be done. Safety systems are to be done. So it takes minimum 9 months.
Got it. And current capacity, you said it can support 1,800 crores, and we were targeting 3,000 crores. Is that right?
Yeah.
Okay, got it. And this is over 2-3 years?
Over 2 years, maybe.
Okay. Got it. Just this last question. So you said that margins had increased because there were some high value added products. Can you actually tell what they are? I didn't understand that part.
We have launched, we were developing, doing R&D for some monopoly products, fancy products, from last 6 months. So we have launched the product for this corporation, Malabar Gold Joy Lucas. Some products monopoly for Malabar Gold, some products monopoly for Joy Lucas, some products monopoly for Kalyan Jewellers. So in that we are taking margins because no other manufacturer have that design or that monopoly variety. So we have increased margin in that, and they have accepted the pricing for that. So they are also making money from that because these products are new in the market. Maybe after 1 year they may be copied or some from other manufacturers. Till then we are also making new inventories, new monopoly products for other quarters also. So last 6 months we were inventing that products and we had launched in last quarter. That's why our margins are increasing.
Okay, got it. Thank you. That's it for me.
Thank you so much.
Thank you. We take a next question from the line of Yashwanti Kedkar, an individual investor. Please go ahead.
Yeah, hello, sir. So I was just going through your research, and after the net profit, I could see that there is some other comprehensive income. There is an item which will be reclassified to the profit and loss to the extent of 7.15 crore. So what is that?
I'm not hearing your question properly.
Am I audible now?
Repeat it.
Yeah. So in your quarterly research in the Q3 FY23,
okay,
that is the December quarter, I could see after the net profit there is an item of 7.15 crore which is classified as items will be reclassified under the profit and loss account. So just wanted to understand what are these items which are coming in the profit and loss account.
Jayesh bhai, hello.
Yeah, Mr. Sanghvi, could you please unmute your phone, sir?
Hello. Jayesh bhai.
Looks like Mr. Sanghvi's line just dropped while he was unmuting.
He is the proper person because he is our senior account head, so he can answer that which class he has put in the balance sheet.
Okay. Mr. Sanghvi is connected to the call now.
Yeah.
So over.
Jayesh bhai, have you heard your question?
Yeah, this is because that for this year, ma'am, for this year we have to go with INDS rules of the company. So for that there are some adjustments other than that we have to make in this quarter.
Okay. So there won't be any adjustment coming in for the next quarter or the further.
That's right.
And one more question just wanted to understand is, like, as you said, we are in the B2B segment and the top 5 customers only contribute around 70%. So isn't it there is a concentration of a risk with this client? So,
Mangesh bhai, can you answer the question?
Yeah. Pardon, madam. I'm getting very loud volume from your side, so I.
Okay. Is it clear now?
Yeah.
So what I'm asking is, like, as you said, we are in the present in the B2B market, but then around B2B market,
okay.
B2B segment, and around 4 to 5 top customers contribute around 70% of our revenue. The top
revenue. Yeah.
So isn't it this is a concentration risk, or like how we wanted to explain this?
Because right now you can see from last 2 years, corporate market share of corporate is raising by 10 to 15%. Last year, corporate share was 38% of the whole India retail sales. Now, last year, and last year they came to 54% of the total retail sales. So in corporates, they are very much transparency level is very high for the consumers. Each and every quality wise, hallmarking wise, quality of the product, quality of the gold. So it's very clear that corporates will grow very drastically in this market, and small and unorganized dealers, they are not doing the business properly with the consumer, they will lose their business. So we are totally concentrating on the corporate because they will have 80% share in 2 years of the Indian market.
Okay, sir. So, and we have seen there is improvement in the EBITDA margin on a on a year-on-year basis for the reported quarter, but still they are below 5%. So normally, what is the industry margin, and like how we are headed for the upgrade in the margin?
In B2B, madam, volumes are very high, but profit margin can't go to 5% because it is very high value jewelry. Gold is very high value. So in industry it is 1.5, 2%, 2.5%, 3% is the max. But we are also trying to reach that 3% mark in next year. But 5% is very challenging in B2B because volumes are very high. In B2C also, corporates have the margin of 3%, 3.5%. Tanishq is it's different from this market because he has 150 years of goodwill and he's encasing his goodwill. Tanishq is different. He has 10% margin bet. So other than that, all the corporates, all the wholesalers have 2.5, 3% margins.
Okay. So our sustainable operating margin would be around 3% even going forward. That is what you were expecting.
We can do business volume more. We can go to 5,000 crore, 10,000 crore.
So it will be a volume business more than the value.
Yeah. If the volume is increasing in rupees wise, PAT will definitely increase.
Okay, sir. Thank you so much and all the best for the coming quarter.
Thank you.
Thank you. Before we take a next question, we'd like to remind participants to ask a question. You may enter star and 1. The next question is from the line of Rajiv Kumar, an individual investor. Please go ahead.
Good evening, Mr. Chauhan.
Good evening.
So, just wanted to understand, how do you see Q4 shaping up? Q3 has been quite good compared to the last adjacent quarter and to even if you compare to the previous year also. So I think it has been mind-blowing. But how do you see it happening in Q4 considering it's more of a season period?
we are expecting very superb Q4, better than Q3. Yeah. You will be seeing the results in April mostly. So
right.
Yeah, because the season is very high.
Going to be much better than the previous years and the previous quarters. You're saying.
Sure, 100%. Yes.
And how much revenues are you expecting, sir, from Varanium tie-up? Is it an entire B2B concept, or it's going to be something?
Totally B2C, not B2B. It is totally B2C, and we are direct to the consumer on the website. The US women, basically it is for the US women. So we are expecting this very good growth and good revenue and good profit from that US Inc. Our subsidiary. But it will be from April next year. It will show the results, and we can't discuss the figures, but we are expecting good results.
Okay. Yeah. Okay. And I had one more question. So, are you not looking at concentrating to B2C into the India market?
Yeah, we all have that in the mind, but we are not planning so. So we have it in the mind. Yeah.
And getting some few more new big clients on board, like Tanishq or someone, so that we can have the risk diversified among the clients.
We are already with the talks with Tanishq and Reliance. So hoping for the best that we can join them.
Okay.
Yeah,
okay.
And we will join. We will give the updates. Yeah.
Yeah, I hope so. I think fingers crossed, sir. And one more question I had, sir. So, considering how Q4 shapes up, somewhere we will be closing around 1,000 crores, right? Plus.
We can't disclose the figure, but it will be.
Yeah, that's what it looks like from my calculation. So, now that we shift the facility, the production facility.
Okay.
And I think the production capacity is going to increase 3 or 4-fold, right?
Yeah.
And I think just from a vision perspective, can we see somewhere the company clocking around 4,000, 5,000 crores in the next 3-4 years?
Yeah, we are targeting that. Yeah, 100% we are targeting.
Right. So I think we are in a right direction. Yeah. Thank you so much, sir, for your answers, and all the best. And I hope we have a good wealth creation for shareholders like us.
Thank you so much, sir.
Our next question is from the line of Jignesh Vaya, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. I just wanted to understand that the monopoly products that you mentioned.
Yeah.
So are they relating somewhere to the designs in the rose gold?
Yeah, we are making in rose gold also and white gold also. In India, you have 80-90% consumption is of rose gold. Have any very low market share of 1 or 2%. Not in yellow gold only, but 20% are rose gold also. So that also is working very good. But our basic inventory of yellow gold, in that only we have made different products and different varieties. So different designing. So some facial designers we have, and for the corporates. Yeah.
Okay. So previously, what products we used to make, in that we had around 2% margin. So in the monopoly product, will the margin increase to 3 to 4%?
Yeah, we are
in that segment
because from last quarter only we have started launching the monopoly products. So it will show more results in next quarter also and in next financial year also. Yeah.
Okay. Thank you.
Thank you. Our next question is a follow-up from Vaibhav Shah from Cogent Research. Please go ahead.
Yeah. Thank you once more for the opportunity. Sir, you were discussing about the inventory. So how many total number of products like SKU designs that we have in terms of numbers, if you can quantify?
We have 9 lakh design inventory from last 15 years we are making, but mostly they get older by the months they go. But we make every month new 4,000-5,000 inventory. So yeah, for the new corporates and existing corporates also for new parties they are joining. We do exhibition every year, 3 exhibitions, which is largest in the Asia and 3rd number in the world, IIGS platform. So we launch our product in that exhibition. So every month we are making 4,000 to 5,000 designs. Yeah.
4,000 to 5,000 every month. Like, so you want to say you are adding around 60,000 designs every year.
Yeah.
Okay. So in terms of this, it will be as specific for every client? Like any specific one thing you are doing for Joy Lucas that you will not do for Malabar, or the products will be similar, or
No. Everything different, and different products for every corporate. Whichever we are making it for Malabar, will be not delivered or shown to Joy Lucas. We are making products for Joy Lucas, it will be not shown to Senco Gold. So Monopoly products for them only. And as per the region, as per the taste, as per the showroom they have, some have showroom in Patna, Bihar, Delhi, Punjab. So we make as per their conversation, they what the products are liked by the customer, and we convey to the designer. They make the special products and show to them, and we keep order for them only, and we keep monopoly for them only.
Okay. So I just want to understand, like, how much big design team you have? Like, you are adding 4,000-5,000 designs every month, so it will be a lot of efforts. So how much design team you have?
We have 30 to 35 designers, male designers, and helping staff also for them.
30-35 designers. So they will be based out of your office in Mulund only, correct?
Yeah.
Okay, sir. And just one last question related to if one design you are creating, so how much time it will take from designing to get the finalized for the going to the production?
It takes 15 to 20 days, sir.
15 to 20 days. Matlab 15 days you will design the product, approved it, and it will go for the production.
When the design is approved that this should be placed or this should be launched in the market, it will take 15 to 20 days. But before it is finalized, approved by the director, it takes many time changes. Many time it is rejected sketch design. We make changes in that only. That it takes time for 20, 25 days, 30 days to get approved. When it is approved from designing to master and master to market, it takes 15 to 20 days.
Okay. So this 4,000-5,000 designs you have mentioned, so it's the numbers that are approved.
We are approved. Yeah.
So in total, how many designs will be there? What will be the rejection ratio? So 4,000-5,000 are approved designs. Then how much will be the rejection?
Maybe 20%.
Maybe 20%. So you are saying like you will be designing around 7,000 products every month, out of which 4,000-5,000 get selected.
Yeah.
Okay.
In this, some are monopoly, some are regular designs which we place every month for the corporate. Some are monopoly designs. Different designer makes different products here.
Okay. So just one more question. Like these products are, it will be all correct? I think you mentioned you are doing three categories: plain, studded, and another is I think Turkish.
Yeah.
So it will be like what will be the largest product in these three?
All have the shares. Plain products are the largest. After that, Caesar product. After that, Turkey products.
Okay. Yeah. Thank you.
Thank you so much.
Thank you. Any participant who wishes to ask a question may enter star and 1. As there are no further questions from the participants, I now hand the floor back to Mr. Umesh Mundekar for closing comments. Over to you, sir.
Thank you everyone for joining the conference call of Sky Gold Limited. If you have any query, you can write to us at research@kirinadvisor.com. Once more, thank you everyone for joining the conference.
Thank you so much, everyone. Thank you so much.
Thank you.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us. You may now disconnect your line.